All right. Good morning, guys. It is 9:30 in the morning, November 6th. Donald Trump just got announced president-elect of the United States of America. He won the presidential vote, and he also won the popular vote, it seems, by up to close to 5 to 6 million citizens. This is absolutely shatters all expectations. Very happy with it. As you all know, I'm very vocal about my political stance. And we'll have another decision in 4 years for all of us to decide if we want to continue down this path, and if we like it. I think we will. So back to trading. Look, surge is crazy. I mean, we're up. If I look at my year to date, Robinhood can't even load it. That's how big it is. That's how good we're doing. I hope everybody had a good time. You guys made some money if you bet on the elections. So we're up close to $100,000 this year. Big number, $100,000 trading options. I would have never imagined this. Now, we did have a pretty big surge because of the Trump presidency. So let's see what we can save, what's worth letting go, and we'll take it from there. So we'll start with CleanSpark. Again, I've been very vocal about this. My shares are for sale at $12.5, $13. I have a few. I have a call at 14 expiring this week, so I'm not concerned about it. Where are we right now? We're at 11.73. So I have two $12 puts expiring this week, which honestly now may be a good time to maybe close those out. These are at 98, 122. I want to see if if these were rolled at all, and I don't think they were. But if we go to CleanSpark, puts sold. Oh, I think they were. No, these are right here. I closed two, so I've got. Is that right? I've got two open. Oh, that's right. Okay. So the question is, do we risk it for the $12 put, or do we just go ahead and close them? And honestly, I'm just going to go ahead and close them. I'm not in the mood to babysit any shares right now. I am going to close them out for $55. It's on the lower end of the bid ask, so let's see if we get this filled. CleanSpark is trending upwards, so I don't think we're going to have an issue with it. But let's go ahead and ask. Yeah, close at 60. All right, we'll go to 60. Give me 60. Come on, give me 60, bro. We're almost out of the money. If I was to wait till tomorrow and the price stayed where it is right now, this thing would be worth $5. But the reality is I'm going to be making money, and the other reality is that I want to get out of CleanSpark. That's my thing right now. I'm not. It's extremely volatile, and I don't truly understand their business. I'd rather have Riot. All right, if this doesn't close them out, then I don't know what will. All right, 70. So we come over here to our put sold. So look, we had 4 initially, and I closed out for $30. Now I'm going to close this for, we said, 11,670. So in total, this trade, we just reduced all our risk off the table. We made a total of $220, and we're out of the trade. Beautiful. Don't get greedy. It expires in 2 days. Obviously, this is a post-election surge. I don't think this is going to be going. I think this is more of a little spike, my personal opinion. So I'm going to act accordingly. Now, CleanSpark, $14 call. I'm not concerned. We've got this $12 call right here, which, quite frankly, I'm going to let go. I'm going to let be. And I will, if I need to let that get assigned, I will. I'll let him go for $12. Let me refresh this because it still shows the $12 puts. So $12 call. Let it happen. 14, let it be. 1150 put. What can we close this at? And how much profit have we gotten already? 50%. If we can close it at 57. Let's see. Can we close it at 57? Nice, 50. Got a pretty good deal here. So we just closed. We had one, so it's not even worth the headache for one. So go ahead and lock in a win. A win is a win is a win. Remember that. A win is a win is a win. A profit is a profit is a profit. It's money you didn't have before. It's money that is now in your pocket. Money that you can now go spend and don't have to babysit a position. We closed it for 50 bucks. We made 78. We made 6.78% on our collateral. How do I come up with that number? We've got a little fancy formula here, which pretty much is telling us that we take 1150, we multiply that by 100. So that's our collateral requirement per contract, right? So that's 1,150. It then says we take that collateral and we times it by how many contracts we have. Fair. And then what we do is we take the total profit and we divide that by the total requirement of collateral, and that gives us an ROI on collateral. So 7%, 6.5% return. I opened this trade November 1st. It's November 6th. In 5 days. Don't get greedy. $1 is $1 is $1. All right. So what else are we looking at here? So CleanSpark, we're pretty much set on CleanSpark. Chipotle, good old Chipotle that I really wanted those shares at $56, to be quite frank. This expires this week. We're at 82%. Honestly, I would normally close this position out, but I really want these shares, and I'm going to look into opening a Chipotle position in the near term. And as a matter of fact, I'm going to come over here, and I'm going to do price moves below 55. Yeah, but you know what? Let's do this. 55.50. But then I ask myself, for $15, I'll probably just close it. All right, we'll let this one ride. If we can close for 15 bucks, I'll do it. I don't think I'm going to pay 20 bucks for that. 20 bucks is lunch. All right. All right. Hims. Let's see. What are we doing with Hims here? So Hims had a pretty, we're up 6% today. I believe they announced earnings pretty recently. They announced 32 cents per share. They completely blew the earnings out of the water. I think it's a good company. Look, I think it's a rebrand of the ever popular Viagra, and they do obviously a lot more than that. But I think this company's here to stay. I think they have a pretty good niche. Their marketing's on point. Let's see what we can do here. We own 100 shares at $16, so it's a phenomenal basis. We've got a $20 call expiring this week. This is at 22. So we may have to, we're definitely going to have to roll this. And then we have 4 $18 puts for December 20th. So those are just leave behinds. Those are ones that you put in, you forget. I mean, we're up already. That's crazy. We're up $500 on these, and it's 50%, and 200. We got, that was incredible. Incredible play. This was a very nice position. So we're going to let that stay. Look, I can already see how things are peaking and coming back down. So it's a good time to sell calls right now. Otherwise, I would wait until tomorrow if you can to really let the market digest the election and let the markets return to normalcy a bit, right? But you got to be careful because, in the case of Hims, for example, because I sold weeklies, I'm already very close to expiration date. And so the extrinsic and my intrinsic values are off a lot, right? So I have a lot more extrinsic value, which is the value of the option contract from my strike upwards than I do have intrinsic. Intrinsic is pretty much the time that I bought. And we can look at it very simply to make that calculation, right? And so what we do is Hims is at $20 and it's trading right now at $22.10. So that means I am $2.12 11 cents above my call, right? So essentially that's money that I personally forgave because my strike is at 20, but the option itself gained that value because whoever holds that contract made that difference, if that makes sense. So if I do the 220 minus the 2210, that's about 10 cents. So there's about 10 cents of time left, if you will, on this contract, and about $220 of value that somebody can just exercise. And so for that reason, I'm going to try and roll that now because I don't want to run the risk of having somebody exercise those shares and then I completely lose them. So let's see what kind of exercise we can do here. If we were to roll it just one additional week, and I always like to roll for a credit, and I always try to go for some sort of share appreciation, whether it's minimal, 50 cents, whatever it is. I always try to, those are my two check marks. Very rarely do I roll for a debit. I always try to do it for a credit. What I want to check, though, is if this call is already a roll, and it is already a roll that I took that I started at 18.50 and I've been rolling now to 20, and I took a $145 loss. So the question is, do I want to fight for these shares or do I want to let them go? And I'm going to really fight for these shares just because I only have 100. So let's see what we can roll to. Right now it's at $22 and there's a $220 value on this contract. If I was to go to, right now we're at 20, right? So if we go one up to $20.50, it'd be at 218. So we'd probably break even at $20.50. Now, what if we were to go to November 22nd, right? Where I've got $22 at 165, so it's still under. We can go all the way up to maybe 21. So why don't we do this? Why don't we just go all the way up to December? Let's see. So quick news flash. I'm getting married in December. My wedding is December 2nd. I'm leaving out of the country on November 24th. So a lot of these rolls that I'm doing, it's just either going to be before or after my wedding. So I'm going to go ahead and do December 6th. And we've got a $20 call. So let's go ahead, and it seems like we can get a 21.50 or a 22. So we can be right above the water at 22 for 208. Now I'm going to try to get this at break even. Doesn't cost me anything, but it doesn't make me anything. There's regulatory fees here, so it is going to be a net loss of 0.066 cents, which is totally understandable. All right. Let's go ahead and leave that. We're going to let that open. We're going to let that simmer. We're going to let that cook a little bit. Did we just close Chipotle? You see, I let some. Yeah, we did at 15. There we go. So let's go here to our side quests tab. And we go to Chipotle. And we just sold that for $15. So we made $125, made about 2.5% return on our collateral. And this position was opened on October 25th. So give or take 10 days. All right, so we've got that. Let's go ahead and leave the HIMS covered here. If you guys have any comments, I see the reviews here in the comments. So anything at all on anything that I'm covering, just feel free to ask in the comments and I'll automatically see it. So we've got HIMS covered here, covered call roll, and we're going to try to get that for $0. And let's let that cook. It's in the cooker right now. All right, into it. This one just went through the roof, and I am. You see, look at this. That is absolutely crazy, right? So this is a very good learning opportunity, right? Because this is one of the main red flags that you have to be cautious about when it comes to selling options, especially the poor man's covered call. I sold calls, and these are all underwater right now. These are all underwater. The only two that I think I'm really doing well on is these these puts that I sold that I'm going to be able to close out now. And then we'll address the calls. But you can see my calls are worth now $16.90, right? Now, I kind of, it's a high risk thing, which is why I closed the majority of my contracts, right? I had 10 contracts open on Intuit. I only have 3 left. So luckily, this is only an issue that I have with 3 calls. And luckily, it happened earlier enough in the game where I pretty much have a little bit over a month, about 5 or 6 weeks to roll these above water, right? Which is best case scenario. If we're not able to do that, I'll cover what pretty much a Band-Aid solution is, but it's pretty much buying an additional set of calls to extend the time that you have to roll. So having said that, let's go ahead and get rid of some of these dead weights here that we have. So we just banked in $2,000 off of this. I'm going to go ahead and try to close this at 40. Let's see if 60. You know, we'll give Robinhood that should fill. All right, so we've got one put closed, and then we've got another put here that we may let run. You know, at 610, there's still $500 left on this. Do I really want to close it right now? Let's wait. I mean, why would we rush it? Intuit is a phenomenal company. Obviously, we have enough leg room there. So we just closed the other one and the other one I had been rolling. So I'm kind of glad that we got rid of it because it was a 620. This is a 610. So it's further reduces my leverage there. We closed it at $60. So we go to Intuit. We go to down here, and we've got our puts sold, our 620, which we just sold for. Let's see if we can. I knew that was going to happen. Just some formatting stuff here. Blah, blah, blah. So the story on this was that this was originally a credit spread that I had opened on Intuit that's 630 at $630 strike. I went underwater. I eventually rolled it on 10/17 and it expired on 10/18. So the day before I said, you know what, let me roll it. I took $1,000 loss on it, rolled it down, and opened a 620. And today we just closed it at $60, right? Is that what we just sold this thing for? Yeah. So we just closed this for $60. We just banked 2.1 grand on this. And then on top of that, on the credit spread, the 610, right? Because what you do with the credit spread is you sell a 630, but then you buy a 610, right? So the 610 acts as like your collateral filler from 610 down. And so what I did is Intuit had gone down. So I held on to the 630 to roll it. And then I sold my 610 put because it had gained in value from 523 to 830. So I gained 347. So on this credit spread, which didn't really go my way, but with a bit of finagling and manufacturing the win, we were able to squeeze out a $1,500 profit. $1,500. I'll take that, right? These puts that I bought are really just collateral fillers, right? So that way the collateral requirement from 510 down takes its place. So it's not going to need $51,000 of collateral if I just buy this call. I mean, if I just buy this put. So that's why you see this put that I paid $90, $70. This is the other credit spread that we have here, the 610, 510. These are the ones that we're just going to let it run because we're not concerned about that right now. It expires November 22nd. So we have about 2 weeks left. Not concerned at it at all. So let's go back to Intuit because we have a lot of fixing to do with Intuit. Luckily, the premiums are juicy enough to where it makes sense to roll. So let's start kind of doing that. You know, first one we're going to have to roll is this 637.50. We collected a decent amount of credit, 550, but now it's worth 2,200. You know, so what we're going to go ahead and do is we're going to roll this position, and it's a 637. We're going to go out to December 6th. Remember, we have till December 20th, right? So if I go to December 6th, I can roll out to 660 and still be good. So what we're going to do is we're going to be a little bit less aggressive. Let's go to November 22nd, which is right before I leave for my wedding, so I can figure out what to do, if I can close them or roll them out. This is worth 22.35. So we're actually going to go to 655. Okay, and we're going to more than likely try to get you see how big the 22, 24, 245 net credit. Always try to reach for a little bit higher than it tells you there, because sometimes the bid and asks are not very liquid and you get stuck with a very bad ask or a very bad fill. So, always try to aim a little bit higher than what the computer or the software is telling you. Let's see if we can get a $300 fill here. And again, we're going to have two options when this happens, right? If Intuit keeps these levels at 650, we're then going to have the option to just sell the calls, because now they're going to be worth a ridiculous amount of money too. I sold a few at 700, 800. I think they're worth like 1,600 now. So it's always a game of chicken, right? But these are the types of moves that you want to be careful with when they go up 6-7%. All right, so that obviously didn't fill. Let's try going down to like 2. Let's go down to 250. See if we can get filled at 250. Is it a credit or a debit? Well, do I want to get paid? I do. 250. Come on, I think we can definitely get 250 filled. Really? All right, let's try 200 and get this out of the way, because I got to do the other ones too. All right. So we just rolled that one. Now let's go to the other ones and roll them too. I really don't mind rolling, because it captures a big chunk of that share appreciation in share price that you're paying. So when it goes down, hopefully, you make all that money back. So I'm not entirely against what's happening here. So we just rolled that one. Now let's go to our 640. Now our 640, November 22nd, 22,000. So we can probably go to 660. But you know what? I'm going to try to keep them both at the same strike, just easier to handle. Boom, we got that filled at $400. So even though we're rolling and even though we're underwater, we are rolling this for premiums, and we're not even going out that far. We're going out a week, 2 weeks. So this is a very good scenario to be in. And then this 637, I'm going to leave this one because it still has about a week left of time. And I don't know how this is going to react. This may go back down to 640, and still. So I'm going to let this one ride. I'm not going to roll this one just yet. Credit spread, we can let run as well. And then we have two 655s that we just rolled. And then the 690s are worth 1730. So look, let me give you a quick snapshot into where we're at with what just happened, right? We just rolled two calls. We rolled the 637 to 655. So we go here, right? And we've got the 637. Close that today for, How much did we pay this for? 637. We paid 2,220. 2,220. Right? No, senor. Sorry, my cat is just yelling at me. Hey! Nope. No, sir. So what I'm doing here is I'm making a little box because this is a roll, right? And a roll I like to keep in boxes so that way I can reference it. No, sir. So I can reference it and know what I did, right? So we're gonna go over here to 11.6. Call. This is for an 11. We sold an 11.22 at 6.55. So an 11.22 at 6.55. And for that, we collected a total of 24.20. So 2,420. And we're going to let that one ride. Now, we also did it for our 640. No, senor. He just loves to go outside, and I made the mistake of letting him. So now he's always yelling. All right, so now we did that for $200. Now we're going to do the other one. So we bought back the 640 for 2,036. So 2,036 is what we bought the 640 for today. We're going to let the math do its thing here. So total amount we paid back, took a $1,500. So we're taking a $3,000 loss in the short term to make all this money back. Because what we did here is we just rolled this to 11.22. I believe we matched the 655 and we sold that one for 24.40. So we even got a little bit better fill than last time. And so we'll leave that one open, you know. So we took a $3,000 loss, but we have a potential to make a $4,000, close to a $5,000 profit. So we're going to monitor these. We're going to monitor the 637.50. You know, this one probably has a bit more intrinsic value because it has more time. And I'll show you what I mean by that. If we go to this call, if I was to take 637.50 and reduce it from the price that we are at right now, which is 655.78, that's 1828. Right? So if I take 1828, which is what the extrinsic value is, and I take it away from what the option is priced at, it leaves me with 742. So we have $742 of intrinsic value, meaning of time that we basically sold, that we bought in a way. You know, by selling it, we collected that credit. So why would we give that credit back if all we have to do is sit and wait for a little bit of time? Even if Intuit stays at 656, but all we do is wait, the stock or the option contract should be worth closer to 1828, making us money. So it makes no sense to close it early, is my point at this particular time. So if we go to this exercise, we have our long calls that are worth 1,600 right now. So if I was to update this, right, this is my dashboard here. Basically, what it tells me is that I had 10 contracts. 4 of them already expired worthless. 3 of them I sold at an average of 750, and the remaining 3 we said are worth 1,600. Total contract cost is what I paid. Total contract cost right there, the 17,000 is what I paid in total for my contract. So this is my total outlay. This is if I went to the store, this is how much it cost me. Current value right now is 7,000, right? So this is pretty much just the addition of all my long calls. Like, what are they worth right now, right? Because when you buy a car, you don't automatically lose your whole money. Your car is still worth something. So if you wanted to sell that car in the future, you could get that money back somehow, right? That is what this is telling you. This is our long calls are still worth $7,000. Premium generated is pretty much all the premium we've generated from the calls sold. So again, you can see here that it excludes our puts and all that stuff. So this is not even being counted because it's not part of the strategy. I could have done that without it. Pending premium is how much premium we have expiring in open positions right now. So we have this, and this. Boom. So we have a profit of 12. So right now we're close to a 70% return on our money. You know, we're getting close to $12,000 in profit on this position, right? Now, our biggest risk right now is to remain above water with our calls by the time that our contracts expire. So by December 20th, I need to be above the stock price of Intuit. And we're going to, let's go ahead and set some parameters here. So if it goes above 660, I'd like to know. If it goes above 670, I'd like to know. But if it goes below 650, I'd like to know. And if it goes below 640, I'd like to know. All right, so that pretty much leaves our Intuit position. I mean, we're trending in the right direction. I'm not even concerned because, look, we just rolled. We had a pretty significant hike in stock price, you know, up 7% overnight. And we only really had to roll from November 8th to November 22nd. That's like 16 days, 2 weeks. You know, so from December 22nd to December 20th, which is when my long calls expire, I still have 4 weeks. So I have 4 additional weeks to keep rolling if I have to, or more than likely what's going to happen is at 11:22, because I remember I read somewhere, and I correct me if I'm wrong, guys, in the chat, but at 21 days left on a contract, the theta decay, so the time decay, accelerates. And if you look at this on a chart, you see the line kind of, you know, it starts steadily going up on theta decay, you know, as time goes by. But when you get to 21 days, it just ramps up and it accelerates. So you have to be careful in those last 2 to 3 weeks where you have to make sure the squeeze is worth the pain, or however that saying goes. But you have to make sure that it's worth your time, because let's say the long contract is worth $800 at the start of those 4 weeks, and you're able to generate $200 every week. Why don't you just sell it? If you're going to generate $200 for the next 4 weeks, that's $800. Right? For the next 4 weeks, that's $800. And at the end of the 4 weeks, that contract's gonna be worth $0. Or just sell it now and save yourself that time. So those are the kind of decisions that we have to be making. But I think this is a very good position to be in. So we have these HIMS is fine. Did we? Oh, we're waiting to roll this HIMS call. Intuit 510 put, 1 buy. These are obviously worth nothing, so I'm just going to hold on to them in case Intuit decides to go the other way. Riot. What do we have going with Riot? So Riot is a miner that I feel comfortable opening a position in. I'm always hesitant in opening up positions with miners because I feel like it's a secondary exposure to Bitcoin. You know, if Bitcoin goes up, miners may or may not go up, and I'm not particularly a fan of that, but I've done my research. I've listened to TJ, the Wheel Deal. I've looked into Riot, and they do have some sort of pedigree with their infrastructure, and I like the way they run things. So this is one that I felt comfortable. I opened up a position when it was trading, and, you know, which is crazy. You know, we're up 20% already. I bought this. I think I bought these shares 3 days ago. You know, so this is a position that I'm going to be expanding on. We have $9.50 puts and $9 puts expiring this week, which I feel very comfortable about. We sold an $11 call, which I think we'll be all right on. I think I'm going to go ahead and just put a little reminder here that if it goes above 11, let me know, just so we know if we have to roll it or not. But I feel pretty comfortable on it. I also want to know if it goes below 1050. So we've got that. $11 call for the next week. We may have to roll this, but I'm not concerned. We have an $11 put for November 22nd as well. Not entirely concerned about it. I think it may be a little bit of an aggressive, but again, it's just one. So at the end of the day, I feel fine just rolling it if we have to. If it was more than one, I'd probably just close it out. You know, $11. This is a good moment to kind of close them out. And then we have 20 $8.50 puts for November 22nd. This was a very, very good play there. I mean, look at that. We're making close to $1,000 just on this trade alone. So that was good. I'm happy with this position. I'm gonna, if this happens to dip below $9, I'm gonna be bringing this position hopefully up to 1,000 shares and matching the rest of the portfolio. Riot is these shares are pretty much free. You know, I've generated close to $3,000 on ROI. If I was to look at my adjusted cost basis, it's negative 26. You know, so I'm in a very good position with Riot. It's been very good to me, and you know, I really appreciate the Twitter X community putting me on it. SoFi, we've got a few things going on with SoFi. How much time are we at? We're at 36. I'm sorry, guys. There's just a lot of things we got to take care of because of what happened with the election. So we are going to be running a little bit more on this. So with SoFi, we're trading at close to $12. I think it touched $12. Wow. SoFi just ran. We've got $10 puts expiring this week. Those are good. $8 puts expiring next week. Chilling. We've got one $11 call on December 6th. So this one, we may just let it go. I think I'm just going to clean the slate with SoFi and move on from it. You know, it's a great company, but I just don't, on a personal level, I don't follow it close enough to be excited about it. And if that's your thesis, then I'm just it's not worth holding onto or protecting your shares. You know, with Tesla, man, they're going to find a pyramid 300 years later, and they're going to fire up my laptop and they're going to see that I'm still rolling Tesla shares. So that's how I feel about it. We have $10 puts for December 20th. This was a very good play here. It was supposed to be a backstop trade, but you know, it printed a lot, $660, still with $180 worth of premium. $10, you know, I feel pretty comfortable with it. These are my two underwater positions here, which I'll probably let these go as well. And then my $10 call, which I had bought as a lottery ticket when I did, just because I didn't even believe this thing was going to get to this price. So it's been interesting watching these little lottery tickets blow up. But yeah, nothing to do with SoFi. We've got some puts, just letting them expire. So TSLL, I sold calls on this position, about half of the position. I've got $14 calls, so I'm not concerned about these. And then $8 puts, not concerned. So let's go ahead and see what we do with these TSLLs. I'm going to go ahead and roll these right now. We're actually pretty decent. I just don't want to get these calls, these shares called away. So I'm going to roll it to, let's see, November 15th, and they're worth 97. So we can roll to 1450, which honestly, I'm not opposed to it because I really do think that this was a post-election surge with Trump winning and so on, but I think we're going to have some sort of plateau there. I don't think it's going to continue. Having said that, I am also going to go ahead and so we just rolled 5 of them. And so I'm going to go ahead and roll, you know, we're looking at November 15th. We're going to do 5 of these at 40. Bring another 200 bucks. All right, so what did I just do there? I have 1,000 shares. And what I did is I rolled the existing shares that we have. So let's go to the TSLL. Okay, so TSLL. Now I got lucky here because I closed my $12 ones for a loss November 2nd. So I kind of smelled this was going to happen. That's why I sold the calls I did pretty far away, but I did want to take advantage of that premium. So what we're doing here is the following. We're going to go ahead and do a little roll box for our TSLL calls. And what we did here is we closed them. We closed 5 at 97. Okay. So that means that we took a $360 loss right off the bat on rolling these. But here's the good news. We sold 11.15s, 14.50s. So we sold 11.15s, 14.50s for $107 each. So that's a potential $530 profit. Right? And then what we're also going to do is we're going to open up a new position here, calls sold. 11.6, calls sold. 18. These are November. These expire November 22nd. These are $18 calls, right? Just so we don't mess around. We did 5 of those for, was it 25 bucks each? No, 40. So $40. So that's a potential 200. So that's a potential $700 we're going to be bringing in with these shares. So that takes care of TSLL. If we look at TSLL, we have an ROI of, right now that ROI is a bit low because it's not taking into account, hopefully, the profits from our roll and then some puts that we have. But right now, my cost basis is $8.22. I bought these for $9.19 and we're down to $8.22. And, these shares are worth $14.72. So, it's if it goes above 1550, let me know. And if it goes below 1450, let me know. Oh, shit. No, above 1550 and below 1450. Okay, cool. All right. What else do we have here? We have Intuit, Riot, SoFi. All right, let's look at Walmart. So what I did with Walmart is I think Walmart has earnings coming up. When is earnings? Let's look at earnings. November 19th. So in about 2 weeks, right? Walmart is in a very keen position because it's one of the few that has been able to position themselves to kind of ride the wave of inflation. Inflation goes up, they just raise their prices. It's a fundamentally very strong company. So we have 3 calls that we bought on Walmart. These calls, I think we're underwater on them. Okay, we're up a little bit, 120 bucks, pretty good. So what I did to kind of offset my basis while we wait for earnings, and again, it's dangerous to do this because these stocks usually run a week or 2 weeks before earnings, depending on what market sentiment is. Given that Trump got introduced to office, and given that he's a big proponent of tariffs, China's supply chain heavily depends on these external countries to supplement their and remain competitive. So I wouldn't be surprised if we get a bit of a surprise on the earnings call as far as a caution on that, and it reacts poorly. And so I've been trying to hedge my exposure right now I have 2 calls that I've sold. I'm very, I sort of want to sell maybe one of these, but for $40, I might as well just hold on to it. Look, I'm going to put one for sale at 600. Okay. And what we're going to do here is the other 2, because I sold 2 calls on my 3 long calls, I sold 2, right? And I'm not going to run a poor man cover call campaign on this because, number one, they're not dated out far enough to be worth it. And Walmart I'm not very familiar with the long-term Walmart. I expressed a bit of my concerns with tariffs coming up, and they're going to have to shift a lot of their supply chain internally, hopefully, to avoid tariffs, or they're going to be hit with heavy tariffs. So let's see what happens. But we essentially have 2 calls expiring. We have 1 call expiring an 85 and an 84. Right now, Walmart's at 84. So look, I'm just going to let these run. I think it'd be a good idea that if it goes below 82, let me know. If it goes below so if it goes below 84, let me know. If it goes below 83, let me know. But if it goes above 85, let me know. And just as a precaution, if it goes above 86, also let me know. So we've got those 2 scenarios here. TSLL. Okay, where were we? Walmart right here. Intuit, we discussed this. Riot, we talked about SoFi, TSLL, CleanSmart, Intuit, Riot, Tesla, 215 call. I'm just going to keep Tesla's my just roll reboat. HIMS, we talked about HIMS, SoFi, SQQQ. So SQQQ is a bit of a market hedge. Obviously, not doing too hot right now, but I am going to hold on to them still. I think it's a good hedge to have. I had sold a bit of my hedge already at $100. I sold a few contracts I sold one at 100. So at least we did that right. Tesla Q. Oh, I still have these here. Tesla Q was a hedge on Tesla as well. These are probably worth nothing. So not concerned about these. It's just another Tesla hedge. It's just little hedges that look, stocks go up and down. That's pretty much the basis of it. And I like to make money when it goes up and it goes down. So if it goes down, I'll make money with that. If it goes up, I'm already making money. So it's little, I guess, profit potentials that I create. Celsius had earnings this morning. I don't think they did too hot. I think they missed earnings, missed expectations. They're trying to optimize, I guess, their supply chain. I need to go over this. It's still a pretty strong buy potential. I still drink Celsius. They already had their earnings estimated. I think they did. I think they were in line, if I'm not mistaken. But pretty much the deal is we have a $25 call option to buy my 25. We got in at a pretty good basis. I think it was $25, 26. So we're just about breaking even on this. Look, Celsius is one of those that I'm not too sure on. I drink it, so that's why I bought it. But, it's that drink industry is very competitive, and it's really just a margin play, and to stay relevant is very, very hard. So what I may do is if this does dip to the 20 below 29 to like the 27s, I may actually open a position. So what we'll do here is if it goes above 31, let me know. But if it goes below 28, even 29, let me know. You know, if it goes below 29 or 28.50, oh shit. 28.50, let me know. You know, I messed up here because I had a $34 call and I closed it because I really wanted to keep these shares. You can see here I bought it back for 125 bucks. Sure, I made a little bit of profit, but I just thought this thing was going to blow through the roof. So it is what it is. We're just going to wait for this to turn green to then sell some calls and just keep going on our journey. It's nothing much about it. What else? Tesla Q, we talked about this. SoFi, Rocket Lab. So what are we doing with Rocket Lab? Rocket Lab, another one of these little lottery tickets. I think we bought two, if I'm not mistaken, or one. Yeah, we bought two $10 calls. We don't have any calls on them right now. I think we sold some calls on it, if I'm not mistaken. It says here I have two sold ones for calls sold for January of 25. Really? I don't see them here. Oh, November 1st. Sell 1250s for 30 for November 1st. 1250s. $30. I see. Oh, two for 30. Oh, so this is a position I just forgot to close out. So let's go ahead and close out. I think it expired worthless. So we'll go ahead and add this for November 1st at $0.60. All right, so we got 60 bucks here. Look, the question is, do we want to keep just, knocking out some premium and then possibly exercise it? I think so. So let's go ahead and just sell some calls on this. Let's go ahead and bring in some moolah here. So we just sold two at $50. So I'm going to go ahead and open it up here. And I'm going to go ahead and do this. Now, for this side quest, for the side quest tab, I like to create boxes around roles like we normally do. But I also like to create roles around positions. So that way it's easier to keep track of what's going on with it. And what I do is when it gets too big, like if I continue with Rocket Lab, I'll just move that into its own individual tab. But these are just stocks that haven't graduated yet to their full individual one. So we've got November 6th here, calls sold. We just sold November 15th. So November 15th, we sold $13 ones. 1350s. Nice. We sold two 1350s for 50 bucks. Boom. $100 profit potential. Call it a day. That's it. That's it on Rocket Lab. So it seems like the only thing we got pending here is that rolling that HIMS call. Look, Tesla, SoFi, TSL, CleanSpark, Riot, and HIMS. Did we sell a call on this already? We did. We sold an 11. Okay, and then on CleanSpark, did we sell everything we have on CleanSpark? We have 1, 2, 3, 4, 5. We have 5. Cool. All right, guys. Well, look, that pretty much solidifies where we're at. For sake of transparency, you know, we'll look at the month. We're up 11% on the month, 25,000. We're up 6,000, 2.5% on the week. Hard to do. I wouldn't use that as a benchmark. 2.5% a week. Those are days that we get lucky, weeks that we get lucky. But look, long story short, we're doing very well. As long as we continue doing this, let's go ahead and see what we can do with this HIMSS call, because we got to really roll this thing. You know, we could also just let it get assigned, but I'm going to fight for these shares. So let's go ahead and see what we can do again. November 15th. So let's go out to December 6th. It's now worth 410. If I was to roll out to December 6th, we'd have to, you know, 21 is, we can pretty much go up $100. Let's take a look at HIMSS real quick. I just want to see something as far as resistance and so on. Has it broken any? So you can see here the Bollinger Bands. It definitely broke out of the Bollinger Bands. It's also on a very oversold RSI rating right now. Usually when it touches this, you can see that it, you know, it corrects heavily right after. So why don't we do this? Let's address this tomorrow. There is a chance this thing gets called away, which is fine. But let's address it tomorrow, because based on its history, it seems like it's going to correct a bit tomorrow, which will give us a chance to either close it out or roll it more favorably. So let's hold on to that. This is our 200-day moving average. So it definitely is above our 200-day moving average. Where's our 21-day? Yeah, just, I mean, it completely just took off, and that's just a result of earnings. So last thing I do want to see, though, is that the highest it's gone is 23. Yeah, so it looks like it broke through, and the highest it's ever had, all-time high, is 24.77. So look, I'm going to put a reminder at 24.50. If we breach 24.50, I'm going to buy some HIMSS long-dated calls, and then I'm going to let this one get assigned, and that profit is going to finance my long calls. So we're going to go over here, and if it goes above 24.50, to let me know. But if it goes below 23.50, we should be in the clear. And we'll let that one roll. All right, guys. Well, that's pretty much it. Any questions that you guys have, please let me know. I know this one ran over a bit. We're closing in on an hour flat. A lot of things that we had to do. But overall, I think it's very beneficial if you have money in the stock market. I do want to highlight, I have 2 spots left. I am helping 2 people currently with their option trading journey. One of them is just getting started, getting them familiar with the concept of an option. So we start in the beginning. And then I have one individual who's already familiar with buying options but not selling. So we're starting that. I max it out at 5, so I do have 3 spots open. Pricing is very custom. It depends on how involved you want me to be, the size of your portfolio. I mean, a lot of different things. What I recommend is shoot me a DM if you're interested in taking your option selling to the next step. Shoot me a DM, we'll chat, and we'll figure something out. Thank you all for watching. As always, transparency is everything. I will keep you posted on my wins and my losses, and I keep everybody up to date on my X as well. Follow me there, Snowball Hustle. Also, please subscribe and follow me on YouTube. And I'll probably be back on closer to the end of the week, so most likely Friday, just to see what expires and what we do. So having said that, guys, I will see you guys on Friday. Have a great Wednesday, and peace out.